Welcome to Truth, Money, and Freedom. Today is Tuesday, May 28th, 2019. Hey, gang. Bond yields are once again inverting, even more, swallowing the 10-year today. Now, that doesn't mean, and by the way, I'll use this as a thumbnail here, I think, for the video. And that doesn't mean the sky is falling or anything, but the yield curve inversion continues. It marches on just the way we expected it to. Even though the mainstream media said, oh, this doesn't mean anything. Yeah, there's no big deal. This kind of thing happens all the time. No. Liar. um, it doesn't surprise me that the mainstream lies about these things. Mainstream economists, let's just put it that way. But this is getting interesting now, gang. And now look at this. This is the 10-year yield. Currently, it's actually 10 years 2.29. I think it's actually a little lower than that. Forgive me for interrupting the flow here. 2.27 right now. It is actually, let's click on this and we'll get the curve here for the CNN business. Here's the curve right here. But they're missing a bunch of treasuries in this graph, and they always have. And by the way, they've taken away their corporate bonds, from this page too, because corporate bonds are largely going into, triple B status. I mean, the corporations are taking on so much debt. Okay, I digress. We'll go back here. Here's the 10-year, and as we know now, it's actually at about 2.27. So, but we'll keep it right at the 2.3 because it's easy to follow this line. Once again, here's the 10-year, 2.3, and you're going past the 7-year, which is way below that, the 5-year, way below that, and then the, let's see, that would be the 3-year below that, the 2-year below that. Oops. Now we go to the 1-year, and the 1-year is paying more than all of these combined, all of these. And same thing with the 6-month, same thing with the 3-month, the 2-month, and the 1-month treasury. This is how inversions work, where the short-term treasuries pay a whole lot more than the long-term. When you lock up your money for 10 years and you're only getting 2.27% interest, on that investment for 10 years, but if you go into a 1-month treasury and you're getting like almost 2.4% for locking up your money for 1 month. 2.4%. I mean, it just doesn't, and that's relative. That would be if you held it for a year. So that's a yearly yield. But you guys see what I'm saying here. The inversion continues, and it is marching to the 15-year treasury. So it continues on. Okay, that was just to let you know, and I will throw this graphic up, like I said, for a YouTube thumbnail. It is continuing, and it does signal there's a problem. The mainstream has not wanted to talk about this. They literally said, don't worry about it. This really isn't a really valid indicator. Yes, it is. It's always been a valid indicator, by the way. In fact, if we look at this story right here, unmistakable whiff of recession. The time to prepare is now. And I'll link this story down below. And now, once again, this is authored by Max Slavo at shtfplan.com, and I'll link up everything down below, as I always do. But call it scaremongering, fear porn, whatever. But the data releases last week had the unmistakable whiff of a recession. So basically we have corporations with earnings issues, yet their stocks are at all-time highs, and they don't seem to go back down again. We have corporations buying back their own stock in record numbers. We've never seen it quite like this before. They're doing it very aggressively too, trying to keep the value of their stock up because, as I said before in a previous video, that's all they have left. They don't have earnings, they don't pay dividends, so all they have left is to raise the value of their stock to make it look attractive. This is Enron. This is what Enron did. This is the model Enron brought to all of us. Don't pay dividends, don't have earnings, just wow the public with advertising and with stock price. And that was their entire business model. And that was, at that time, the biggest bankruptcy in American history. It was huge. They said like the company was worth I don't remember how many $1 billion the company was worth, and when they actually went into bankruptcy, they found out it was all smoke and mirrors, that the company was worth like 1/80th of what it claimed to be worth. Okay, so basically, once again, I'm stating the obvious here. Most of the economic news is bleak, And we're not just talking about trade tariff issues with China here. We're talking about, basically this has been going on. This is a trend that started a while ago. But I do know that that U.S. China trade is going to be blamed for a recession because they're setting it up that way. This has been coming for a long time, gang. This really has. And once again, this is very important, and cannot be overstated. We are in emergency monetary policy right now. We have never left that since 2008. We can't even go back to the mean on interest rates. The mean is 5.5%. You guys, if you look at interest rates through the history, you'll find that 5.5% is the average interest rates that we have had. We can't even get there because if they raise it that high, it'll kill the entire stock market because people are trading on margin. They're borrowing money to trade. So, this is a very precarious situation we're in right now. And if, basically the Fed has been trying to lower interest rates, or I'm sorry, trying to raise interest rates, but it looks like they're going to have to lower, and they're going to have to do it sometime soon if they want to stave off this bad economic data. Once again, they'll blame China trade, and that's part of it, to be sure. But there are other factors at play here. For instance, China trade doesn't stop the fact that our housing sales have been going down year over year. That has nothing to do with China trade. That has to do with interest rates. Interest rates go up. Basically people can't afford houses anymore. So the prices of homes have to come down to compensate for the increased interest rates. It's that simple. So I've said before, and I know you guys listen to me, and those probably remember some of the predictions I make, and I don't make a whole lot of them, especially dates, because I'm usually wrong just like everybody else. But I did say it would be June or September we would see some kind of interest rate decline, be it 0.25 or 25 basis points, or even up to a full basis point or a 1% or 1%. It could be anywhere in between there, but they're going to have to do it. I don't really see any way they can get out of it. And they're probably going to start money printing. So that'll probably start soon. Quantitative tightening doesn't really even exist anymore because the Federal Reserve is buying treasuries with the money they're taking in for selling off their balance sheet, monetizing the debt. So that's an illusion right there. Quantitative tightening is not happening. They know that if they did that, that would hurt the economy as well. All right, but I'll link these articles down below. I'm not going to read anything from them. But let's take a look at this real quick here. I just wanted to bring this up because I want to point out the hypocrisy. And by the way, I know that people get mad at me when I bring up, I'm very critical of Republicans, not so much of Democrats. And I'll say again, the reason being is I expect Democrats to be satanic communists, and they never disappoint me. I just have nothing to complain about. They live up to my expectations of being satanic communists. But Republicans, their platform, they don't exist within their platform anymore. It's not a reality for the entire party. There may be few individuals that have conservative ideals within the Republican Party, but by far and large, they're socialist and they're fascist, or I'm sorry, corporatist. But so are the Democrats. They're very corporatist as well. This is, by the way, if anyone says, hey, listen, I need evidence of this, all you have to do is look at the wall. Trump tries to get the wall built, and it's going to take him 5 times more money than it would be for a private concern to get it done. That's corporatism. That's sweetheart deals. So, that's how that works. Trump's golf outings have reportedly cost taxpayers more than $100 million. Now, he was very critical, and I realize this is the Business Insider, but they're taking numbers from the Huffington Post here. But I've got to point out to you guys that Donald Trump was extremely critical of Obama when Obama was in office, for spending money on vacations and golf trips. And here Trump's doing it, and he's doing it larger, bigly, huge. In fact, if you look at the numbers here, the figure of how much he spent, 102 million so far in 2.5 years, that's 255 times the presidential salary that he declined to take. That says something about the man. And once again, guys, I'm just pointing out hypocrisies here. It's just like, Trump, and by the way, I'll point this out too. Trump was very critical of Ted Cruz because Ted Cruz had all kinds of ties to Goldman Sachs. Not only was he getting loans for his campaign from Goldman Sachs, but his wife worked at Goldman Sachs. And Trump says, when he's campaigning, he's actually at that point he is just campaigning Trump and not a President Trump. So he's candidate Trump. And he's saying, "Is that what you want? Goldman Sachs in the White House? That's no one wants that. That's what Hillary would do." And he was right. Hillary would have done that too. But my God, when he got into the White House, he dragged 6 swamp creatures from Goldman Sachs right into his own cabinet. Talk about calling the kettle black. I mean, geez. I mean, Mr. Trump, please stop trying to drain the swamp. You're killing us by filling it up. Um, but I digress. I didn't mean to get into a Trump thing, but I did want to point out. I remember when he was campaigning, and he was very critical of Obama. Very critical because of golfing trips and vacations. Someone's going to probably end up doing a number comparing Trump at 3 years versus Obama in 3 years and how much money they've spent, on vacations and golf trips. And I think Trump outdid Obama here. So that's my, personal opinion. But at the same time, he was critical of Obama for this nonsense, which he should have been. But then he's engaging in the same dang nonsense. What do we have here? Okay. Going back to the markets, I'll finish out with the markets today. See where they're at. Once again, I just don't care about the actual numbers in the stock market. I care about the up-down activity, green or red. That's the only thing I really pay attention to. So looks like the markets are green today, so they are up a little bit. At the same time, the markets are going up, so the treasuries are being bought. And the yield curve inversion continues. Oil is going up. Gang, I have said before, the undervalued assets, precious metals, that's gold and silver, cryptocurrencies, and then also oil. I think oil is a value right now, a good value. I think it's going to go up. And I can't tell you why. It's just a gut feeling I have. And it probably has something to do with all those tensions with Iran, Saudi Arabia promising to cut back and indeed have cut back. So the cheap, easy oil is probably going to have to give way to the more expensive oil, like the shale oil we have here in the United States. That may be a big part of it. But I want to show you something else. Look how hard they hit gold and silver. Man, they really pummeled it, especially silver. And once again, it doesn't matter how far they take down silver now. The premiums come up to match it, and there's just you're in other words, they go down to $14, and you'll pay the same amount for silver as if it were $15 because the premiums rise up to match that. So once again, you're still in a wonderful zone to buy silver. This is a good time to buy silver. And if you don't have any, you might get a little bit. Shoot, man, if you got $50, $100, burning a hole in your pocket, you could do a lot worse than just get a few ounces of silver, is all I'm saying. Gold is a pretty good deal too. However, with the ratio as far as it is between the two, silver right now seems to me like it might be the better thing to buy. And I could be wrong. Gold is going to go up. There's no doubt about it in my mind. And it'll probably go up before silver does. And I am not one of those guys that's going to tell you silver's going up to $600 or $900 an ounce. I don't believe that. I just don't. I respect people who think that. I understand they have their reasons, and there are lots of mathematical, common sense, just fundamental reasons why silver and gold should climb and go to the moon. I get that, but I just don't see them letting go control. We're talking about the Treasury here. The Treasury controls the COMEX. The COMEX is setting the price. The LBMA doesn't do the price fix anymore. They gave that up about 2 years ago. So roughly about the time Donald Trump came into office, the U.S. Treasury, under the president, remember now that's a cabinet level position, is now fixing gold and silver prices. So Donald Trump himself is pushing down the price of gold and silver. It's happening through his, Treasury office. Who's in charge of that? Steve Mnuchin, one of the Goldman Sachs swamp creatures that Trump brought on board as soon as he became president. Does that surprise us? No. No, it really doesn't. I want you guys to understand that's where this manipulation of the market is coming from, is actually coming from the Treasury, U.S. Treasury Department. I'm sorry to say that Trump is involved, but he brought in Steve Mnuchin, and Steve Mnuchin's doing whatever you see happening to the commodity markets. That's him, and that's who Trump brought in. So it is what it is. Okay, oil, going up just a tad. Um, Once again, I can see oil in the next year reaching for 100 again, and that's a pretty bold prediction, and that's scary, very scary. But I do see something like that happening, and that may be from money printing. That may be from the U.S. dollar going down in value against other currencies. That may have to do with the euro. I don't know, but I'm thinking oil may be going up here, and they're going to keep it up for a while. So, and then of course that'll hurt the U.S. economy in a very big way. We're already going into a recession, despite the fact that the mainstream media, says it's 15 months from now. I don't think it'll be 15 months. I think we'll start seeing it, quicker than that. And also, too, I intend to do a podcast in the near future to prove to everybody that the GDP, the gross domestic product of the United States, is one of the most lied about figures the U.S. government produces from the Congressional Budget Office. It's a worse lie even than inflation or the unemployment. The GDP has actually been negative for most of the last at least 10 years, possibly 20. It's been negative, not positive. They say it's been positive, but it's just not the case. And once again, gang, this is really simple math, but I will actually have that drawn out for you in easy to see and understand terms. But if we have a trade deficit every single year, the United States, then you have liquidity, you have money leaving the system and never coming back. Now, if we had a trade deficit one year and a surplus the next that were roughly equal, then you would probably be 0% GDP. And once again, we're just talking about money velocity here, but for GDP. But I'm talking about real, honest to God numbers. If we're hemorrhaging $500 billion a year in trade deficits, and that's all countries combined, you put it all together, and it's maybe 300 billion to 500 billion per year that we're in deficit for trade. In other words, we're buying more things from others than they're buying from us. Then you're going to have a negative GDP. It's going to affect your gross domestic product. So I will put together a podcast in the near future. I have one coming up with conjecture in the near future as well, which will be episode 3 of Finance and Politics, Connecting the Dots. I intend to do a full 10 of those episodes. I have 10 ideas that I wanted to convey. But conjecture, as soon as we can line up our time, we'll probably get that done this week. So we'll have episode 3 out. But once again, I have over-talked, like I always do. I'm a talker. And I just want to say how much I appreciate each and every one of you, not just as a group, but as individuals. I appreciate the likes. I appreciate the comments. I appreciate the shares. So, gang, we do it for you. There's no monetization here, as you guys know. We do it for you guys. This is an education thing. We're trying to help you think a little bit differently about the way things actually work in finance and politics and the truth of it all. This is what our goal is. And if you have ideas of things you want covered in podcasts, you guys just let us know in the comment section, and we'll see what we can do to accommodate you. Thank you for being here. If you weren't here, we wouldn't be here. You guys all have a wonderful day. God bless you all.